JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 8th of February 2021. So yep, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, jumping into the charts, the first one I want to pick up here is the Euro Stocks 50. I haven't looked at this one for quite a while, but yeah, at the moment it's at a very interesting spot right now because we are near this highest point of January, which is around the 3,658 zone. We did overshoot it today, however the bulls kind of were pushed away a little bit here and the bears kind of took control, and now they're keeping the price still below this hurdle, below the highest point of January. So which means that for now we will remain somewhat positive. However, we need that daily confirmation, daily close above this area in order to get a little bit more excited with higher levels. For now, we're just waiting here because if we do get that daily close, then our next target is the 3,777 territory marked by the low of the 21st of February. In terms of the downside, now here, previously I talked about this little hurdle right here, the 3,573-74 zone. However, we might adjust that right now and basically focus on the 3,567 territory marked by the inside swing high here of the 28th of January. And at the same time, if we get a break below that area, we would also have the price below the 21-day EMA as well. So in a way, all this could be then this break here could open the door for some bears, for more bears to join in. There we go. But again, for now, the downside scenario is slightly off the table, guys, and I'm still kind of leaning a little bit more towards the upside. However, let's see where this daily candle is going to end today. Jumping into FTSE 100, now this one's a little bit more interesting. It's not popping nicely here to the upside, together with the other indices. It's pushing higher. However, it's seen a little bit on the stronger side because the British pound is on the lower side today. So as we know, FTSE tends to perform best when the pound is on the weaker side. So for now, looking at this picture, I mean, after last time when I spoke about this one and when I said that keep your eyes on this upside line, which could provide good support, it did so. Then I aimed for this downside line, which we managed to test today. So now it's a bit of a waiting game here because in a way, there is a chance for this one to pop higher. However, given the situation, I would prefer to actually wait for a break of this downside line and push above the 6,610 zone right here, marked by the low of the 25th of January, and then kind of aim for some higher levels. At the moment, well, it is how it is. I mean, it's kind of coiling up here a little bit, I would say. So that's why, I mean, I would prefer to wait until we get that clear push here through one of these lines, either the downside line or this upside line. The S&P 500, now looking at this picture here, we can see that, yes, on Friday, the index pushed nicely higher. It created a new all-time high. This morning, looking at the cash index, we can see that the price has also moved further north and basically hit a new all-time high on the cash index. And basically, we are seeing that now at this point in time, the cash index is trading at around 3,900 levels. So basically, we are above Friday's close, and yep, we are near that 3,900 level. So let's see how this is going to continue trading today. For now, well, we'll have to just stick to the upside. Although, don't get me wrong, I mean, we are quite overstretched in the short run to the upside. But again, there we haven't got a good confirmation, a reversal confirmation. So that's why the trend is still to the upside, and we will continue targeting higher levels unless the index starts falling somewhere below the 3,871 zone right here, or even better, maybe a drop below this 3,847 could do the trick for more sellers. But again, for now, guys, it is how it is. Let's not overcomplicate things. For now, it's yep, the trend is still to the upside. The index is not showing any signs of reversal, but if we start seeing some heavy selling, then yes, maybe this could in a way change the short-term outlook. Now jumping into silver very quickly. So silver is pushing to the upside today, getting back above this 26.60 zone. I talked about this last week, and now in a way what I'm going to do here is I'm going to target this 27.92 territory marked by the high of the 6th of January, or in other words, the highest point of January, and then we'll take it from there. I don't want to rush into anything yet, guys. For now, like I said, I'll go step by step, and I'll aim for this hurdle, and let's see if we can actually overcome it. If we cannot overcome it, then yep, another slide here back to this to one of these upside lines could be possible. So in other words, if we want to draw an arrow here, then the scenario will be somewhat of like this. So yep, keep your eyes on that one. If of course it pushes further above this 27.92 territory, then my next target is the highest point of August of last year, near the 29.86 level, and then we'll take it from there. Now Ripple. Ripple is excuse me, Ripple is stuck, I would say. I mean, first of all, we're back above this downside line, which we can get rid of, because in a way we saw that the downside line got violated, and in a way it's not really doing much here. So the other thing to keep in mind here is the fact that it seems that the crypto is coiling up. So kind of if we ignore this spike right here we had here on the 1st of February, now you can see that the the crypto is coiling up, and in a way maybe, just maybe, it could be forming a possible bullish pennant here. So we have our pole, and maybe this could be seen as a bullish pennant. However, let's not get our hopes up yet. This crypto remains under a lot of problems, so basically for now we'll just probably observe this one. Again, as you're probably aware, the situation with the SEC, that's not really helping this crypto. However, if there's a news coming out with any small little positivity, that might kind of push the rate here, the rate of XRP USD to the upside, and maybe yep, we could reach these levels last seen in November, the end of November. However, for now, let's keep it as it is, guys. For now, let's just continue observing the price action, and yep, let's see which of the sides here of this triangle this crypto will break first, and then we'll take it from there. In terms of the downside, what you could do here is keep your eyes on yesterday's low, Sunday's low, yep, near the 0.3891 zone, and then we'll take it from there. In terms of the upside, you could keep an eye on the high of the 4th of February, and that's basically the high, well, the high of the 4th of February, and that's basically near the 0.48 territory. And so a nice good pop above this may strengthen the upside scenario. Now jumping into a few pairs here very quickly, AUDJPY. So I talked about this this pair this morning, and I was saying keep your eyes on this 80.93 territory, which currently continues to do its job as and it's continuing to act as a good area of resistance. So as I mentioned this morning as well, that in order to get a little bit more excited with higher levels, we need that push above this, a stronger push above this 80.93, because otherwise if this starts reversing back down, we'll basically we could be getting ourselves here a nice possible little range, which is roughly between the 79.51 and the 80.93 levels. So in a way, something like this. Let me just quickly mark this on our charts. So this is the lower side here, and yep, basically that's the kind of the upper side to keep an eye on, and like I said, this could be seen as a possible little range. But again, it's too early for that, I think, because we would need to see a nice, strong, good kind of a stronger rejection from this hurdle, and we would need to see the pair drifting back south again. For now, I'm just observing this one, and if we do see that push above that 80.93 territory, now that's where, that's where kind of more buyers could join in. USD CAD. So I haven't looked at this one for quite a while, because again it's still kind of trading below this downside line drawn from the high of the 19th of March of last year. So although we keep getting these little small overshoots, still the rate remains below this downside line. Now in a way, if we wanna aim for some higher levels, well, we still need to wait for that break. And in addition to that, we would need to see a good push above the 1.2881 zone right here, marked by the high of the 28th of January, or in other words, the highest point of January. And then if we do get that push above the 1.2881, then yep, higher levels could be met. In terms of the downside, well, I mean, a drop here below this hurdle, below this, the low of the 29th of January here, could do the trick for more sellers, and that level is around the 1.2737 zone. Currently we can see that the rate is balancing, just kind of oscillating around the 21-day EMA, but if the pair kind of starts drifting below this 1.2737 zone, it could increase its chances for a further decline towards the 1.2630 zone, which, as you can see, recently acted as a fantastic area of support. GBPCHF, now this one is a tricky one. Now after last week's strong push higher here, you can see that the pair is kind of in a little correction mode right now. Now on one hand, yes, we are still moving higher. Yes, we are still trading above some of these kind of well, actually one of these upside lines here, or you can draw it from here. Again, it's up to your interpretation, guys, but I'm gonna keep this one on the chart for now. I'm gonna ignore this little kind of drop here below this, but yep, again, some of these lines are still tentative, so maybe don't focus on them too much. But what you could keep an eye on here, of course, is the fact that if we will consider this candle here, the 4th of February candle, as a potential pole, then we could be seeing a potential flag forming right now, and that could be seen as a bullish flag. So again, that's one of the ideas. However, on the other hand, given that we have already had a decent kind of up move here, and given the fact that the pair the rate has distanced itself from the upside line, from the 21-day EMA, so maybe a bit of a retracement here, a larger retracement to the downside could be possible. But again, let's not get ahead of ourselves. Let's see how this is going to play out. So basically, as you can see right now, the pair is resting near this the high of the 5th of March here, and that's marked near the 1.2337 zone, approximately around here. This is where the pair is currently trading at. If the pair today remains below this, if we see that daily candle remaining below this hurdle, below this high of the 5th of March of 2020, then maybe we'll go for a bit of a larger corrective move here. We'll aim for some lower areas. Initially, I'll target this hurdle, the 1.2294, marked by the high of the 1st of February, and then I'll take it from there, because maybe it won't even go towards this upside line. Maybe we'll actually just reverse from here and push higher. So again, something to keep in mind. But again, for now, guys, from the shorter term perspective, 1.2337, that's what I'm keeping an eye on for today. If we see a further push lower, then my next target is the 1.2294, and then I'll take it from there. I'll pick up on this pair again just to see what we can do after. But for now, let's see how this is going to play out. And finally, EURUSD. So, to be honest, not much has changed since morning when I've covered this pair, and basically the rate kind of still remains below the downside line. Excuse me, below the downside line, below that 1.2059 zone, and below the 21-day EMA. So in a way, there is still a lot of chances here. There are still a lot of chances here for the bears kind of to step in and drive this one lower. However, again, let's put it this way. I mean, at this point in time, it's a tricky one, because on Friday we saw this nice reversal, strong reversal to the upside, but it failed to kind of move above this 1.2059 zone, above this downside line. So in a way, the downside scenario could still be on the table, not off the table, but on the table. So yeah, keep that in mind. If we get a break of this downside line and a push above the 21-day EMA, then yep, we'll maybe start looking at some higher levels. But at the moment, that's not the case. So okay, guys, I hope you found it useful. Thank you very much for watching and listening. I hope you've enjoyed this session. If you want to catch my video tomorrow morning, as always, my Traders Espresso, that's 7 o'clock GMT time. For now, guys, I hope you have a wonderful evening. Stay safe, and I'll see you later. Thank you very much, and bye-bye.